Hello everyone, Justin with Deep Dive Stocks here, and today I thought we might do a coveted request, a deep dive into GME. I thought it might be appropriate to do so since earnings is coming up. That way we can get a glance for how GME is positioned as earnings come up. So without further ado, let's go ahead and take a dive. The first thing we're going to explore is VoEx. If you're not too familiar with VoEx, no worries. I'll put a link down in the description below to a video describing VoEx that I made not too long ago. That was really hard to say for some reason. I don't know why. But let's look at VoEx. The curious thing about VoEx is that GME had a repeating 5-month VoEx pattern that was pretty reliable in terms of anticipating large movements on GME. We can see this here back in April when I pointed it out on Twitter and made a Reddit post about it. The idea was that every 5 months or so, VoEx would start to rise, and this was always typically followed by a large movement in price. However, we see when we look at the current VoEx, this 5-month cycle stops. So instead of the VoEx spiking happen, we see that VoEx actually calmed down quite substantially. Now, VoEx has just steadily been rising into the stable zone, which is a pretty bullish finding. Although it may not be as glitz and glamoury as the VoEx spikes and the price action that comes after it, a stable stock typically is a stock that just steadily appreciates in price, which is something that I think a lot of investors would like to see with GME. So overall, with VoEx daily in the stable zone along with VoEx trend, the medium to long-term outlook for GME is a bullish outlook. We can then move to the snap graphs, which unfortunately don't share our optimistic interpretation of VoEx. The snap graphs are an algorithmic interpretation of VoEx on 4 different time frames: the 20-day, the 10-day, the 5-day, and the 1-day. And it tells us the anticipated movement based off of if the crosshairs are above or below the gold line. We see that on the 20 trading day, the 10 trading day snap graphs, we have the crosshairs below the gold line, which is a bearish outlook. Nonetheless, it is important to note that the confidence interval or the shaded region of these snap outlooks are pretty large. And because they're large, we can almost kind of just ignore them. I put those confidence intervals there for precisely this reason. Sometimes the snap algorithm has a difficulty quantifying the behavior of VoEx, and we're seeing that here. Thankfully for us, however, the smaller time frames, the 5 trading days and the 1 trading days, we see that the confidence intervals are much nicer, they're much more neat, and it just so happens that on both of these time frames we have a bullish outlook as well because the crosshairs are above the gold line. Moving on towards the Gamma Hedging Heatmap, we see that GME is not in a gamma squeeze, and this is quite beneficial to it currently. We see that the purchasing support, or the blue, is located below the crosshairs, and this means that if GME were to be pushed down or if it were to experience a decline in price, there is a good amount of purchasing support that would come in due to the options dealers hedging. We also see, however, that the consequence, or one of the truths of reality, is that where there's purchasing support, there often is selling pressure not too far behind, and we see that selling pressure really ramps up on GME at about $30. So if GME were to appreciate to about $30, we can expect some resistance just by way of the amount of shares that options dealers are going to have to sell into the market. However, again, we see that the purchasing support is quite nice on GME, and that should provide a nice buoyant force. We can also look at the influence distribution that shows us the most likely outcome 5 days in advance is a positive price movement. And that is because the peak of the influence distribution is in the blue. So overall, the Gamma Hedging Heatmap is giving us a pretty bullish outlook on GME as well. Or bullish, but also I think the main take-home point is it's stable. From there, we can move over to the options layouts, and there's kind of just 2 interesting findings here. The first is that the deep in the money puts that were opened, I know some members of Deep Dive Stocks use this finding as a red flag for a stock, because typically whenever a deep in the money put is opened, or a collection of them, the equity typically experiences a pretty substantial downward move in price. However, we also see that a good amount of out of the money calls were opened as well, and so maybe they balance each other out. But overall, we see that the behavior on GME for right now, in terms of the options that are being opened, is relatively, honestly, pretty unremarkable. We'll see as the week progresses, as people prepare for earnings, how those options layouts can change. And then finally, we can move down to the data tables, where what caught my eye the most was the directionalized options table itself. And I look at the out-of-the-money calls and puts to see which type of out-of-the-money call or put are being opened. Are they dealer long or are they dealer short? And here we see overall, over the past 5 days for the out-of-the-money calls, we have a 23% increase in the dealer short calls and a 21% decrease in the dealer long calls. That means that retail is starting to pick up its call purchasing. And then moving over to the puts, we see that there has been an average increase of 2% over the past 5 days for the dealer long puts, but an average increase of 13% for the dealer short out-of-the-money puts. This means that overall, over the past 5 days, the retail market has been purchasing puts more than they have been selling puts on GME. This configuration is probably what is providing such nice purchasing support located spot down and stabilizing GME enough to have both positive gamma, positive delta, and a very nice stabilizing gamma hedging heat map. So overall, the data prints for GME are stable for once, honestly. A lot of GME in recent times has been attempting to catch a falling knife by keeping track of the VoEx spikes, by keeping track of when it enters into a gamma squeeze, when the dealer long puts start to spike. But now we see that GME is calming down. We have VoEx that is not VoEx is not erratic. It's actually pretty boring lately. It's inside of stability. We have a very nice stable options environment that is providing good purchasing support if the index or if GME were to fall. So overall, it's a nice environment for GME to find itself as earnings approach. It'll be interesting to see if any of this changes substantially as earnings approaches in the next few days. But for right now, GME, per the data, finds itself in a very comfortable position. Well, that's all I have for you guys. I hope you enjoy. My name's Justin, and I'll see you guys next time. Bye.